Welcome to Share Talk, the only podcast where investors come first.
Hello and welcome to Share Talk. Today I'm joined by Oisín Fanning, who's CEO at SLE.L Energy. How are you today, Oisín?
Morning, Zach. Very well, thank you.
Right, you've just got your interim results out, and unlike Shell and other companies at the moment, you're not cash strapped. You've been giving out cash to shareholders over the course of the last 6 months, etc. How are you able to be in this sort of positive position, whereas many others at the moment are not?
I think one of the reasons is that when we made our investment into Nigeria in 2016, it was made through a financial instrument, if you like. We're receiving a coupon of 17% on the 175 million we lent in. That means that we are constantly receiving cash from our partners, principal plus interest, and we're able to pay at least half of that back to shareholders. In the next 12 months, we'll receive another 100 million at least. So regardless of the market conditions, actually, regardless of oil, regardless of operations, we will be giving shareholders next year at least the same amount of dividend they've received this year, which I think was 35 million.
So basically, the secret sauce has actually been to lend companies money rather than to invest in cash outright.
Yeah, we made a decision which was just very fortunate in 2016 to make the investment as a loan. So we lent the 175 million at a coupon of 17% and also received 10.5% indirect interest in the field. So it's turned out to be a very, very good deal, and it's very much safeguarded. And regardless of what happens in markets, we're in a position to return cash to shareholders every year.
And I suppose the other point that has been a highlight of the recent past is the way that you have invested in SLE.L yourself. I mean, skin in the game is one of the the big green flags as far as investors are concerned. And you've had one of the largest green flags around in terms of putting in, £20 million, something like that, into in terms of buying stock.
Correct, yeah, and I mean the reality there is that obviously I feel, just as I've said, extremely comfortable that those dividends will be paid out. They'll be paid out to shareholders, including me, and that makes me very comfortable in terms of any payments or repayments that I have to make. It's fundamentally, I'm not concerned about market conditions. Obviously, the better market conditions are, we can give even more dividends, but we certainly will be receiving our 100 million in the next sort of 12, 13 months, and we will be returning at least 50, 60% of that to shareholders again. So right. I'm feeling very comfortable at this moment in time.
And I mean, there's a lot going on in the interim statement. What do you think are the highlights as far as you're concerned at the moment?
Well, I suppose it's really the cash in. People should focus on cash in because the profit and loss is a non-cash situation. That's based on IFRS rules. So they look at the cash in. They should look at the shareholder returns we've been given, over 60 million in the last 2 years, and also look very closely at the two deals we did in the last few months. The investment in the pipeline, the ELI pipeline, which we think will produce 8 to 10 million a year for us. And the investment in OSA, and they're actually preparing the site to drill a well in the coming months. So if that well is anyway successful, that'll be more cash. So we've done two good deals that we're very happy with, and on a similar basis of lending money actually, and getting the percentage for the loan. So we've safeguarded our cash. We do get our cash back regardless in both those deals, and at the same time we get a percentage in equity terms.
I mean, one of the highlights, I suppose, is also the way that, I mean, as you are generating so much cash, you're investing in it, let's say, this different way, but through loans. You have a lot of cash in the bank, but the market cap has not really responded. It's almost behaving as we'll value the company just in terms of the cash which is already in, and maybe what will be coming through in the near term. So $100 million is coming through, so your market cap is £120 million. How would you value the company as a oil and gas expert in the field?
Well, I mean, again, markets are markets, and they value the company as they should be valued market-wise. But in real terms, the valuation of the company should be many multiples of where it is today. I would say, personally, 2 or 3 times. But look, the market dictates that. Nobody else. My job is to keep bringing in revenue stream, keep getting dividends for shareholders, and eventually it'll win out. There's no doubt there was a certain amount of reluctance about any company involved in Nigeria when we started in 2016. I think people are getting more and more comfortable. People are seeing that there's no issue in getting the money out of Nigeria. We've already taken 195 million out of Nigeria ourselves without any difficulty whatsoever. There are no exchange controls. Everything is dollar-based. So we think it's a really comfortable country and a good country to work in. We're very happy. There are a number of broker notes going to be coming out very shortly. There's one in the next couple of days that I'm aware of, and others, and that'll go into a lot more detail and maybe support what you're suggesting.
So over the next 6 months, what can we expect from Stanley on more of the same?
Yeah, I think we certainly be looking at deals that we can do in that period of time, and we'll be looking basically at just collecting revenue stream and giving it back to shareholders. That's the key. That's what we set out to do in 2016. It was our so-called mission statement at the time, and obviously in the last 2 years we've been able to manage to do that quite well.
Right, and then just finally, obviously the oil price and COVID is in people's minds. Obviously in the UK here, potential of a second lockdown. You've said that you're not really affected by the day-to-day movements of the oil market, but how much of an influence is that at the moment? Does that make it easier to make deals? Is it easier to find deals? How's that affecting you?
Probably easier to find deals. Look, it slows operations down because everybody has to be extra cautious. So, the good thing is, funny enough, even though it's rampant in Africa, the virus, it really is. The death tolls have been very minimal. They've been quite small, particularly in Nigeria and other countries. Nobody seems to know why. Is it because people have been taking anti-malaria drugs for years? They've built up a tolerance? I don't know. But actually, the death toll is very low. But they have the exact same precautions in Nigeria as we have over here. That does slow things down. There's no doubt about it. But look, it slows it down by a month or two in terms of, for instance, our pipeline's been slowed down. Probably won't go live until maybe the end of December rather than this month. But, it's a small delay. It's not going to create any major issues. So I think that they've been really cautious across Africa because they were expecting the pandemic to hit them harder, which is a good thing.
Okay, well, we'll see how everything pans out. Oisín Fanning, CEO at SLE.L Energy, thank you very much indeed.
Thank you, Zach.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.